Do you have childcare expenses for those kiddos of yours? And if you do, you're probably familiar with using either a dependent care flexible spending account or getting the child dependent care tax credit. Well, here, good news. Through the latest stimulus plan, both of those systems give you a bigger tax benefit. I'll explain those details coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So, in the American Rescue Plan Act, the $1.9 trillion stimulus bill, it actually gave some lucrative, some enhanced tax benefits for those child care expenses that you have for those kiddos. And I know you had a ton. You probably had a ton last year. I mean, I've got 3 kids of my own, and last year was just crazy. Working from home, the kids doing virtual school, it was just a mess. Thankfully, I've got Supermom as a wife, and she just handled all of that stuff. But it was one of the most challenging years for working parents with kids still in elementary school. Let's just say that, or even younger than that. Just very difficult. And through the stimulus plan, even though we all have our own opinions, whether the stimulus is too much or we like the features or not, I actually like this one because it speaks directly to what working parents are dealing with today. And that is, I have some childcare expenses because I've got to work and my kids are either virtual or they're hybrid or whatever, and they've got to do their thing and I've got to take care of them, but I also have to work as well. And this tax credit gives you some financial trade-off for those potentially higher expenses. So I also want to talk to you about some changes with the Child Care Flex Spending Act, but let's talk about first the Child Independent Care Tax Credit. And let's talk about how it used to work, and I'll explain the change for 2021. How it used to work is you'd track your qualifying expenses, your qualifying child care expenses per child, okay? And what are some of those qualifying expenses? Well, it's got to be for dependent care, child care, all right? You can't be out of work. Like if you're not working, then you can take care of your own kids. So there were some limitations there. If you were disabled or you're a full-time student, yeah, that qualified. But so you got to be working. You've got to have a child independent care. It can't be for private school. It's got to be actual expenses for their care. Some preschool type of expenses do qualify, but those are some examples of qualifying expenses for this. But you track all those expenses per child, because then the limit is up to $3,000 of qualifying child care costs for one child, or up to $6,000 of dependent or child care costs for 2 children or more. Those were your qualifying expenses, and then your tax credit was equal to, for most of us, 20% of those expenses. Okay, if your income was below $15,000, your adjusted gross income, then it was a higher tax credit, 35%. But for most people, let's just say it was a 20% tax credit. So if you had one kiddo and they hit the maximum, $3,000 times 20%, $600 tax credit. That's awesome. That's awesome. That, covers a couple days of childcare. If you have more than one child, you hit that max of $6,000, 20% tax credit, $1,200 as a tax credit on your tax return. That's awesome. Not a refundable tax credit, so it has to offset. It's a tax credit that goes against other taxes that, federal taxes that you would owe. If you had enough deductions to wipe out all your taxes, doesn't drop to the bottom line and add to your refund, but it does offset your tax, so that's a big win. So what did they change with the American Rescue Plan Act? Here's how it works now. Instead of capping your qualifying expenses at $3,000, the new cap is $8,000 for one child. If you have 2 kids or more, the cap is now $16,000. And those of you that don't have kids are listening to this saying, that's way too much. My goodness, that's a lot of money. No, guys, childcare, it's the second biggest expense in our household other than our mortgage. I mean, it is outrageously expensive. And I will tell you right now, my wife works in the dental field and works at a fabulous office. But, when you look at the costs to send a kid to childcare compared to the hourly rate of many jobs out there, you'd say, actually, it's better for me financially to stay home and take care of my kid than it is to go to work. I wouldn't make enough to cover the cost of childcare. So increasing this tax, the qualifying expense limit to $8,000, I love that idea. I absolutely love it, simply because those of you that are juggling working and childcare, you know you're spending this much. You know you are. And so that's fantastic. Now that 20% tax credit, okay, on $8,000, that's $1,600. That's fantastic. And obviously, multiply that by 2 if you maximize and hit that $16,000 total limit. So huge benefit here for 2021 for the child and dependent care tax credit. Also, the tax credit goes from 20% up to 50% if your income's below certain limits. And that income limit changed as well. That income limit, that adjusted gross income limit for married filing jointly, goes all the way up to $125,000. And so if you're near that, or if you're in the range, work with your certified financial planner, do tax planning so you can figure out exactly where the threshold's going to be for you. And then that can determine, well, should you fund pre-tax contribution or Roth? Should you do more to your HSA or whatever to try to get your adjusted gross income as low as possible so that you can get even more of this tax credit, because the maximum amount has gone from 20%, not to 35%, but from 20% to 50%, and you can have more income and still get that full amount. So, and then the last thing that they've changed with this, with the child and dependent care tax credit, is some of it now could be refundable based on your situation. If you've got enough deductions and other tax credits to wipe out all of your tax, some of it could be refundable. Now, let's transition very quickly to the other item that was changed related to childcare expenses within ARPA, the American Rescue Plan Act, and that is they've doubled the amount of expenses that you can qualify for through a flexible spending account, your childcare flexible spending account. Now, there's a whole nother video out there that I'm going to create about should you use childcare flex, or should you just get the tax credit for child and dependent care expenses. But right now, if you're using the dependent care flex, the amount that you can contribute, the amount that you can claim for child care expenses has now doubled for 2021 based on the previous limit. And if you spend more than that, you can actually then claim the child and dependent care tax credit over and above what you actually get and what you use for the dependent care flexible spending account. So if you've got kids and you're a working parent, that made sense to you. If you don't have kids, or you've never had to figure this out before, work with your certified financial planner on what of this applies to you and what tax planning strategies you need to consider. Should you increase your child care flex right now? Should you change from Roth contributions to pre-tax, or increase your contribution to your HSA, or increase your contribution to your 401k or simple IRA to try to get your income below certain thresholds to maximize these new expanded tax benefits? That's the big idea. Know that these tax credits have been expanded. Work with your certified financial planner to do proactive tax planning to maximize these for your situation. If you don't have a CFP, contact one on my team. You can find us online, corehorn.com. That's Corehorn with a K, wisemoneyshow.com. And find us there as well, or send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.